Mr. Srinivasan, so there's been a lot of talk about Google when it comes to digital advertising. Let's talk about some of the other big tech firms for a minute, keeping in mind, like any market, this isn't static. You've got other companies moving, and it's always good to keep our eye on where things could be going next. Apple seems to have realized that the market for the iPhone is quite saturated. I mean, it's a good position for anyone making phones to be in, where pretty much everyone who wants an iPhone now has one, and so most sales are going to come from replacements. And so it's now using the vast network that it has and citing privacy concerns in order to gain exclusive control over our data so it can monopolize ads that we see on our iOS devices. And correct me if I'm misstating any feature of this marketplace. You've got Amazon that increasingly serves as kind of a clearinghouse for goods made in China, opting for higher margins from selling ads to Chinese manufacturers. And then you've got Facebook, which of course sits on a treasure trove of data. Now, Facebook has always been dependent on ads. It would likely have an even greater presence in the ad tech space in digital ads had it not reached its own agreement with Google preventing that. Should we be concerned about any of these other firms' activity in digital advertising at this point?
Well, I would say that this bill doesn't aim to fix, all problems, but most of the companies that you mentioned do operate what would be termed and captured by the bill as exchanges that are bringing together third-party buyers and third-party sellers, and they would be subject to the same conflicts of interest rules and the same rules around having to sort of siphon off and manage and protect data in different divisions.
Okay. So they're not in the same position as Google, but would be in the same position in the sense that they're covered entities.
They would be covered entities in some respects. So, for example, Facebook does act as a broker under the bill on the buy side, and they do bring together buyers and sellers, buyers and third-party sellers in real-time auction markets. And Amazon also plays multiple roles in this respect too. So Amazon is not just selling ads on Amazon.com, but it's also intermediating ads on behalf of third parties, and so it too would be captured under certain aspects of the bill.
Okay, thank you. Mr. Kent, let's talk about a little bit more about data. You've written a fair amount on this, and you've written that collecting data in one context but then using it in another context, e.g. behavioral advertising, tends to violate consumer expectations. How would the America Act prevent a company like Google from collecting data in one context and then using it in another in the harmful ways that you described?
Yeah, I guess two ways. The best interest and execution obligations will require that they don't collect that data and use it for a different purpose. So the data is only going to be collected by Google or Facebook or whoever the company is that's in that tier for the purpose of the publisher and maximizing value for the publisher. So that data stays, almost has a ring fence, if you will, around it so that it can't be taken and used for other value elsewhere. And so I think that's one way. And then, the restrictions on being on both sides of the market too will eliminate the example that I used in my opening remarks around tying, where one company can say, I control most of the demand in the ad marketplace, and so therefore you need to give me all this data as part of the conditions, as a precondition of the deal, which is quite abusive, and it's quite documented in all the AG.
Well, and you wouldn't get away with that.
You wouldn't get away
if there were a free market. Nobody would get away with that because they tell you to pound sand.
Yeah, if the consumer knew it was happening and the publisher actually had any sort of market power, yeah.
Right.
And again, every single publisher at any size can't stop that.
Right. And presumably the customers of that entity would also insist upon it. But it's hard to tell someone to pound sand when...
Yeah. We've done the research on it, Senator. We've asked, when you're not using a Facebook product, would you expect your data to be collected and used for a different purpose? And the answer is no from like 60% of the users. We asked the same question about Google. Users do not want to be tracked across the web. If they choose to use a product as part of real choice and real competition, and that data is used to deliver the service to them, that's great. That's fine. I'm a subscriber. You can use my data to authenticate my subscription. Wonderful. I'm a customer of this product. You can personalize it based on the data that I'm giving you to make the product better. If I don't like what you're doing, I'll go elsewhere. They do not expect that data to be collected and used in a totally different purpose.
So that prevailing assumption with regard to Facebook that you just described is not accurate.
Correct.
Right. Now, you've also said that, quote, the issue of tracking and data collection and use by third parties is a really important issue, and that consumers should have a global privacy control and an ability to opt out. But you limited that to opting out of third-party data use. Is that right?
I did.
Here it seems that the first-party data use is really the fundamental problem, because companies like Google or like Meta can use all the data they collect on their properties to feed their advertising engines. So how could a law like the America Act address this problem?
Well, again, I'll go back to the data point from the UK Competition Authority report that showed that Google and Facebook uniquely collect a majority of their data from third parties. They get a majority of the data they have for targeted advertising from third parties, according to that report. So it's collected in a third-party context when the customer is not choosing to use a Google or Facebook product. And so one, it cuts that all out because the user can no longer be tracked from one context to the other. And then the first-party data is still an issue. I mean, if you're on Google search, because 90% of the searches happen on Google, they're going to have a lot of first-party data on you. You still need to have choice in search, but that's a different issue than we're trying to address here.
Okay. Hang on one second. Mr. Henderson, let's go back to you for a minute. This stock market example. Is that really fair? I mean, you've got 700 times, the scale is much larger. The market concentration, market power of any individual firm in that setting, it's a lot more distributed, isn't it?
So first of all, Senator, I didn't make up this analogy. My paper responds to the claims that the proper analogy here for the regulation.
Yeah.
Okay, so I was just responding to that. And the claims that there are not vertically integrated, et cetera. With respect to market concentration in the securities business, the publicly traded securities, so not on the dark pools, the top three companies, the New York Stock Exchange, NASDAQ, and the CBOE, have an overwhelming market share. So there is concentration. And the reason there's concentration, it's the same reason there's concentration in this market, is because there's economies of scale and network effects. And that can explain why there are very few competitors. In the dark pool, the alternative trading systems under Reg NMS, again, the couple, 2, 3 largest firms, Goldman, Bank of America, JP Morgan, have overwhelming market shares there as well for the same reasons, economies of scales and network effects. So I don't want to push the analogy to stock markets and say that's a basis. I was merely responding to the claim that this vertical integration across the whole ad stack is some kind of monster we don't see anywhere. And I'll just note one final comment, which is the New York Stock Exchange, it is true that they do not own a broker-dealer, but the New York Stock Exchange sells tools for both buyers and sellers of stock. In fact, which is what Google does. In fact, if you are a small-time trader and you do not have your own algorithmic trading department like the big traders do, the New York Stock Exchange will sell you their version of that, which is you're like a small advertiser, exactly the same way that Google does. So this behavior that we see with these kinds of potential conflicts of interest exist everywhere. And I want to say I'm sensitive to the concerns that you have about privacy, pornography, all the things that you said. I've got 3 kids myself. These issues that you're raising are serious concerns. And if Google or anybody else, I'm not here on behalf of Google, if Google or anybody else is being deceptive and they're misleading people about how they're using their personal data, we've got laws against that. I'm here just to point out some of the costs of the America Act that I think aren't being considered.
No, I get that. But there are some significant differences here. I mean, the stock example, you've got, it's a pretty diffused marketplace. It is highly regulated. and it's quite fragmented. And you don't have one firm dominating the lion's share of the activity, the buying and the selling.
It's true, and I just want to say, let me just say one thing about the highly regulated. I completely agree with you. As I lay out in my paper, the reason it's highly regulated has nothing to do with these conflicts of interest, because when I go into CVS, there are also conflicts of interest with them selling branded products and generic products and using data and using cameras to check my eye line and where they place everything and the data there. I happily turn over my cell phone number to them to get a 2% discount. They collect that data. They know exactly what I'm buying. They use that to target me. This is ubiquitous in all markets. The point about regulation I want to emphasize is the SEC has been trying for 20 years to implement a best interest rule in the stock market. For 20 years, they've been trying, and 43% of trades trade at the best interest rule. And this isn't a market that is trivial compared to the complexity of the ad market. So if you sign on for a best interest rule, and the only reason we have it in the stock market is because there's not physical separation. So you're using a kind of belt and suspenders approach here. But if you sign on to a best interest rule, you're signing on to a massive regulatory apparatus that cannot be administered by state attorneys generals or the Department of Justice. It will require an administrative agency to oversee the vast amount of data, because the SEC is that with 4,500 employees, and they are not successful at implementing a best interest rule after 20 years.
So that's one reason why it's sometimes fair to insist on structural separation instead of a massive regulatory body.
I think that's a mistake for reasons I've said otherwise. I'm merely pointing out that if you go with the best interest rule, you are signing on, in my opinion, based on my experience in the stock exchange, which is much simpler, to a huge, massive regulatory apparatus to enforce a best interest rule.
It's just not the case with this bill. No. That's just not true. That's utterly at odds with what the bill says.
I'm just taking the language of the bill as it is, which is enforcing a best interest rule that would require an exchange to trade in the best interest of its clients. That's the rule that the stock exchange has. It's Rule 611, and requires the same best execution rules for stock trades. It's the exact same. On that narrow point, it's the exact same.
Okay, Ms. Srinivasan and Mr. Kent and Mr. Lynn are all chomping at the bit to answer this, and I have to know what they're saying. This will be it, I promise.
No, I want to see it too. I was going to actually have them do it because they just seemed so eager to defend you. Yes.
All right, Barry, let's start with you.
Thank you, Senator. Professor Henderson said that this kind of vertical integration across the ad stack is not some kind of a monster that we don't see elsewhere. He said it actually exists everywhere. Pre-1980, it existed nowhere. It was against the law. It was against the traditions of the United States going back to the beginning. And that's why what you just said, that's why we need to insist on structural separation, is absolutely correct. And I bless you for working on this this bill.
Thank you. Thank you. Ms. Srinivasan?
So the bill actually applies a best interest rule not to exchanges, but to the brokers. And to my knowledge today, I am not aware actually of any of the sort of entities that are helping buyers or sellers that proclaim to do anything but act in their customers' interests. And so in effect, the only thing that this bill really does is shed sunlight onto what's actually going on so that the customers can complain and hold their brokers to account when they're not actually doing what they're promising that they're doing. The other thing that might be helpful to just be clear about is that in financial markets, there's really a two-tiered approach. So Goldman can't own the New York Stock Exchange because the New York Stock Exchange is big and important and it has a lot of market share. And then the smaller guys can do both. They can be brokers and operate dark pools or ATSs. And those guys have to manage their conflicts of interest and disclose a lot of information so that we can hold those conflicts of interest to account. The bill takes the exact same approach, really. It says that the very largest firms that own the very largest exchanges, can't simultaneously be on all sides of the transaction at the same time. But smaller ones, like in financial markets, can both be a broker and an exchange. And in those situations, what we need to do is, that's not being done now, is we need to manage conflicts of interest. We need to make sure they are managing their conflicts of interest. And we need to make sure that there's enough transparency and disclosure so that customers themselves can audit and police the behavior of intermediaries.
Which they would have a greater ability to do under this bill.
That's correct.
Currently, they don't have the ability to do that. Mr. Kint.
Yeah, and the last point, thank you. I'm not going to go deep on the stock piece again, but I still, the thing I understand enough is that if these dark pools, that if there's some self-preferencing or preferencing or favoring, that would be illegal. And so we need something to actually make that same behavior illegal in the digital advertising world, which it's currently not. And yes, to Ms. Srinivasan's point, the SSPs, we call them, they're brokers on behalf of the publishers. They're supposed to act in their best interests. But in the case of at least Google and a few others, when the publisher says, are you actually doing this? They have no recourse. There's no way to get the data to prove that that company is not taking the data and the value and using it elsewhere. And so time and time again, we see that issue where they might not be acting in their best interest. And so that's the core underlying problem. And I think that's resolved by the legislation.
Thank you. It keeps occurring to me that I keep confusing a dark pool with dark web and Deadpool. I'm going to try to keep those separate in my mind. Thank you.